So have you been trying to make sense of the US housing market lately? It's kind of crazy, right? One headline says rates are falling and more homes are for sale. The next one says affordability is the worst it's ever been. It feels completely contradictory. So what is actually going on? Let's dig into this paradox and figure out what it all means for you. You know, it all really starts with stories like this one. This is from a first-time home buyer on Reddit. It's such a simple, triumphant post, but man, it captures that dream so many people have been chasing, especially after some of the toughest years in housing history.
And that's the thing. For the first time in what feels like forever, these stories don't feel like a one-in-a-million shot anymore. After a really brutal stretch of sky-high rates and insane bidding wars, it feels like the narrative is finally starting to shift. We're seeing tangible signs that buyers might, finally, be getting a little breathing room.
Okay, so let's start there with this glimmer of hope. What's actually behind this new wave of optimism? Well, when you look at the data, it really boils down to two huge things. Mortgage rates are coming down, and there's a much-needed boost in the number of homes for sale.
And on the surface, the numbers look pretty great. We're talking mortgage rates hitting their lowest point in 3 years. At the same time, the total number of homes for sale is up 14% from last year. And get this, new listings actually went up in September, a time of year when they usually start to slow down. You put all that together, and it's pulling buyers who've been sitting on the sidelines right back into the game.
Now, in theory, this is awesome, right? Lower rates mean you can afford more house. That dip from 7% down to around 6.1% can literally give you an extra $30,000 in your budget. But then there's reality. You see comments like this one, seller playing games, we walked. The data just doesn't capture that frustrating on-the-ground human element. And this is right where that shiny, good news story starts to get a lot more complicated.
Because while it's great that there are more homes on the market, it begs a really important question. More homes for whom? And this brings us to the other side of the paradox, the great affordability gap.
This right here is the core of the issue. Those big national inventory numbers, they're kind of a mirage. They look good from far away, but up close, they mask a severe mismatch between the price tags on available homes and what the average person's paycheck can actually handle.
A report from the National Association of Realtors put a number on this problem, and honestly, it's a gut punch. For a middle-income household, let's say a family earning $75,000 a year, the market is short nearly 416,000 affordable homes. That's not just a gap, that is a massive chasm.
And this chart really shows you the devastating reality. The gray bars, that's how many homes are on the market. The blue bars show how many homes people at each income level can actually afford. And that huge red bar right in the middle, that's the deficit. For a family earning 75 grand, the American dream becomes, well, basically a statistical long shot. They're facing the largest deficit on the entire chart.
So it's clear who's getting squeezed the most here. It's middle and lower income families. Think about this. Before the pandemic, if your household made $75,000, you could afford almost half of the homes for sale. Today, it's just over a fifth. Meanwhile, if you're earning over $200,000, the market is pretty much your oyster. The scale of this imbalance is just staggering. But the affordability gap, that's only part one of the problem. Part two is all about geography. See, we're in the middle of a huge construction boom, but it isn't actually fixing the shortage for a lot of people. Why? Well, because we're building the homes in the wrong places. This map from a recent government report tells the whole story. Don't worry about the word quintiles. It just means they've split the country into 5 equal groups based on building activity. See all that orange? That's where almost all the action is, heavily concentrated in places like Florida, Texas, and Arizona. The rest of the country? Yeah, not seeing nearly as much building. And this creates a totally bizarre situation. You have some parts of the country that could soon be facing a glut of new homes, while other places are still absolutely desperate for more housing. It's wild. And these charts, side by side, perfectly illustrate the result. It's like we're living in two completely different housing markets at the same time. On the left, you've got the underbuilt markets. Inventory is super tight. Price growth is still strong. On the right, the overbuilt markets. Inventory is piling up and price and rent growth are hitting the brakes. I mean, the differences are just stark. In the underbuilt areas, prices are still jumping by 7 to 8% a year. But in the overbuilt spots, price growth has slowed to a crawl. And get this, rents are actually starting to fall. It just drives home the point. Your entire experience as a home buyer depends completely on which of these two worlds you happen to live in.
So, with this fractured market as the backdrop, what does the future hold? Where are we headed from here? To get a clue, let's take a look at the economic forecast from the Mortgage Bankers Association.
All right, so their forecast suggests we're in for a long, slow recovery. They don't see mortgage rates dropping off a cliff. They expect them to kind of hover in the mid 6% range for the next couple of years. At the same time, they're predicting home prices will be essentially flat. Oh, and add to that a softening job market and a pretty significant 40% chance of a recession. So, not exactly a rosy picture.
And this chart just hammers it home. It shows exactly why that recovery is going to feel so slow. Yeah, we're off the recent peaks, but look where rates are expected to settle. It is significantly higher than what we all got used to over the last decade. The big takeaway here? The era of those ultra-low 3% mortgage rates seems to be definitively over.
So, after looking at all these conflicting pieces of data, what's the big takeaway? How are you supposed to navigate a market that seems to be pulling in a million different directions all at once?
Okay, it really comes down to this. First, the idea of a single U.S. housing market is basically a myth. It's really thousands of hyper-local markets, all doing their own thing. Second, those optimistic national headlines, they just don't tell the whole story. Your personal experience is dictated entirely by your income and your zip code. And finally, and this is the big one, this isn't just a housing market problem. It's a fundamental challenge to the American dream, with a deep, persistent lack of affordable homes locking out millions of families. Which leaves us all with the ultimate question. Is what we're seeing just a messy, temporary correction on the path back to something normal? Or is this fractured, unequal, and deeply confusing landscape the new normal for American housing?